Hello traders, Nick Shaheen here looking at Hyliion, HYLN. I'm back to covering this because the last video was the comments were so civil. I don't mind an opposing opinion, but this time they were all great comments. So let's see if we can help somebody who's long manage the risk. First of all, I'll tell you what I think. A lot of these EV companies are going to be duds from a stock perspective, not from a company perspective. So the stock itself is not likely to, most of them are not likely to be superstars like Tesla. There's only one Elon Musk, and they already jumped on the opportunity, and even they almost went out of business as lately as last year, and they needed 1,000 miracles to fall in line in order for them to succeed this big. The EV market for these guys is somewhat different because they are Class A, whatever Class A, the semis, and they also have something now, which I think the retrofit of the electrified hybrid model. So if you have a semi, you can retrofit it to be half electric by taking one axle and making it battery driven. We also have the Hypertruck coming, which is so slick looking. I know nothing beyond that, so this on you. The fundamentals. I can tell you one thing though, if I'm in a very speculative situation like this one is, I call it speculative because the burden of proof is on the bulls, is on the company to actually deliver. That's why it's speculative. That's like the definition of it. It's not a classification of, hey, this is a crapshoot. It's not the same. But because of that, I don't average down, especially close together. Like if I bought at 16, I don't buy more at 13. Because the outcome is binary. They will either make it or they won't. So long term, the stock, not the company, the stock. So this is my personal bias. And I'm not long the company. I'm not short the company. I was long a couple of times. And then once it broke 18, I posted a video saying it's broken. I don't want to touch it. But be careful, because if it doesn't recover 15, 12, 13 are coming. And they did. So now what? This tells me that the range is tight, right? Anybody can see that. But it's tightening. So it was up here, and now it's coming to a boiling point. And so now somebody needs a little bit of technical knowledge in order to trade this based on the charts. Get a little help from the charts. If you don't believe in charts, you should open your minds to it, because just for the sheer fact that most of the trading is done by machines. And if that's the case, they only use data, which is built into the charts. The easiest way to say it, look left and see what happened last time we were here. For example, 1350 is a wall for now, because it was a place where they tried to hold and then they lost. And now they're coming back into it. So this extension here, they can recover half and not violate any Fibonacci levels or whatever that machines look for. So if you want, if there's another value to look for, which would be 1380, because of these three candles right there. So I'm getting wonky here to say that onus is on the bulls to snap out of this lower high trend. And there are a couple of them. One is down here, like right here, at 1350 to 1380. So mark that. And the other one is at the upper edge of this descending channel, which is 1450. In fact, if you want to mark it, it'll be like 14.8. If they get above that, then you get some sort of a catalyst to attack 16 zone. 15.5 will be in the way. 15 will be in the way, because that was a place where they tried to hold so badly, like this one right there. And then they lost it to no fault of their own. I don't know. Maybe that's the time the markets collapse, but it doesn't matter why. The machines know that it's broken, so when they come back to it, they will assume it's going to be sold off on the first attempt. But getting above this is good news, because then you would have, hey, that's an iron condor, 2 iron condors. Successful ones. So if they first battle is here and here, if they get to here and they fade a little bit, that's fine. They come back and they break above it. They come back and test it for footing, 14.5. Then they can finish it off. It's not a typical cup and handle, but the fact that they come back to the neckline and then the bulls prevail, if they prevail, then it shows that the bears may be a little bit tired, and then the bulls can have their way a little bit. they will face immediate resistance, in my opinion, here. And this orange line is it's called the point of control. It's from the volume profile. It shows where bulls and bears are very active. Buyers and sellers are very, very active. The most active point of the last, and since January. So this point right here, see it? The long bar of volume. So when they get back to it, it's likely to be resistance. If you're running into it, it's resistance. If you're falling into it, it's support. On the way down, it lent some support, but they fell below it. Now it's going to be a problem on the way up. It is imperative that they don't make a new low, because just like the opportunity lies above here, there's risk that lies below here and below here. So this came on a really bad day, right? So this should not be lost. Otherwise, we're talking single digits, folks. This one is more critical because it's more recent and it's from the 19th. So this is step one. If the bulls lose this one and then slip below 12.10, 12.2, then the intentions are not there to save it. Then the descending channel will continue. So when the stock is losing this way, it's drifting lower, onus is on the bulls to snap out of it. So the bottoming is not a point in time, it's a process. The first of it is you stop making lower lows. And that's why I'm saying it's important that they hold the line, because step one, stop making lower lows. It's okay to make lower highs while you stop making lower lows, because then you could build higher lows. That's also fine until you come into a point where the battle happens. Which one wins, this one or that one? Will the floor attempt fail? If it fails here, it's going to come to here, and if it fails here, it's going down. Versus the upside potential. Snap out of it, come back, snap out of it some more, the second level that we just talked about, come back, get above it, and now you start building higher lows, and you stop making lower highs. And then the bulls now can start to establish an ascending channel. That's the point, to snap. So that's the bottoming process. It's not like this, like we've all used to now. Like we're all now used to crash, recovery, crash, recovery. This is just junk. Proper recoveries are establish a good base from which to snap out of it. Look back a few years when Apple fell apart before the split, that first split, Apple fell apart and they made fun of it for months. It took it months and months and months to come back. And then another one, and then once it jumped above it, then it was a sustainable rally like you wouldn't believe. But it fell apart, and I kid you not, I sold $60 puts in Apple, meaning bullish position. Somebody thought it was going to 55. That's why they paid me money to get out at 60. So I was like, yeah, I'll be buying your stocks at 50, 60 if it goes there. So this is a bottom like this. So here, and then break out of this nastiness is way better than this. My personal opinion. But the lines are the same. First, don't make a lower low here. While if you can do that, break above this one and that one, which is 13.8 and 13.5-ish, to get to that, which is the big battle, 14.8. And then you have to face the wall at 15.5-ish, give or take. And of course, the same repeats itself at 17 and 18. Every ledge they try to hold on the way down is going to be a problem on the way up. This is my honest opinion. I don't have a dog in this fight. I wish the company all the success because it has a cool truck. My son is 19. He builds trucks for a living, trophy trucks. And he just called me last week. He wants to buy a Peterbilt. So he loves semis. So this is right up my alley. And I'm definitely not a hater. And I'm pulling for them. But onus on the bulls to take control of this and snap out of this descending channel.